Okay, let's get one thing clear. Elon Musk and Tesla are about to drop a massive bombshell for investors. This Robotaxi event. Like, it is going to be massive. Bigger than you think. It is being reported today that data collection around the Warner Bros. Studio parking lot is picking up. This article from Drive Tesla says the decision to pick a movie studio seemed like a strange one, with initial speculation suggesting Tesla was planning to use the studio's realistic street seat sets to showcase the capabilities of the Robotaxi in environments that closely mimic real-world scenarios. By doing so, Tesla could control the demonstration environment, ensuring a smooth and impressive debut without the unpredictability of actual city streets. However, that would go against how Tesla has promoted its full self-driving system, in that it can operate on any road in the US or Canada. But it appears there is more to the story. On Sunday, noted Tesla tracker Green the Only shared on X that in preparation for the event, Tesla has ramped up its data collection efforts, particularly around the Warner Bros. Studio. Green noted that data collection has also increased in other areas like Tesla Diner and various San Francisco and Bay Area locations. Green also shared an image showing the area that Tesla has been focusing on around the Warner Bros. Studio, adding that this data collection program started around August 28th, 2024. So just a couple of days ago. This information brought up another theory. Instead of, or perhaps in addition to, using the movie sets for some controlled demonstration, Tesla may also be collecting vast amounts of data on the streets surrounding the studio for real-world demonstrations. Now, this will be massive for Tesla stock. If we get real-world demonstrations to Wall Street on FSD and robotaxis and the potential of this, perhaps even with a robotaxi vehicle doing the demonstration. Wow. Wow. I mean, that is going to have an insanely positive effect on Tesla stock. It's hard to even measure because Wall Street barely knows anything about FSD and really that segment of Tesla's business as is. And if Tesla can come out and show they can actually do a Robotaxi ride in a Robotaxi vehicle, yeah, I don't think there's going to be much to stop Tesla stock. And I do think this will be a bombshell for Tesla stock investors. I think we're going to be pleasantly surprised with how Tesla stock reacts following that, as long as things go well. We also have some pretty big Tesla stock news today as well out of China. This article here says Tesla China sales in August up 3% year over year, according to data released today by the China Passenger Car Association. Tesla China sold 86,697 vehicles in August, including those sold in China and those exported to overseas markets, up 17% from July. So some pretty impressive month-over-month growth, and you're definitely seeing things accelerate over in China for Tesla, but this is only still up 3% year over year. Good news is Wall Street really didn't have high expectations for this number, so this should be seen as a positive for Tesla stock coming tomorrow morning. At the time of recording this video, futures are open. The NASDAQ is up 0.2% for your futures heading into tomorrow. S&P futures are up 0.1%, and the Dow is slightly in the red. It's also being reported today that Tesla wants Australian regulators to allow vehicles with seats that can fully recline, conductive with sleeping, or rotate away from simply looking forward. It says here on this left column, managing automated vehicle safety before the regulatory framework is in place, and it says highlighted here, it is our understanding that the current legal frameworks may be sufficient to facilitate limited deployments within states or territories. This is for ADAS systems, stands for Autonomous Driver Assistance Systems, which would be something like FSD. So it does look like Tesla is targeting the launch of FSD in Australia coming sometime in the future. Now, Alex on X writes, Tesla's Robotaxi seat, which is expected to be presented together with the vehicle on October 10th, will probably be able to rotate as you wish, and that makes a lot of sense for a fully autonomous vehicle. It's also being reported that China's wholesale sales of passenger NEVs are expected to come in at 1.05 million units in August, which would be the first time this year that they have exceeded 1 million units. You can actually see here, this is up 11% from July. So Tesla sales specifically are up 17%. Tesla is outpacing other just average car companies in China that deal with batteries and electric vehicles. So I wouldn't be surprised if Wall Street takes this as really good news as well, coming tomorrow morning. It's also being reported that Volkswagen is going to shut down some factories in Germany. It says here, car manufacturer Volkswagen has to cut costs. Job guarantees are canceled, compulsory redundancies and plant closures are possible. And it also says here on Bloomberg, Volkswagen is considering unprecedented factory closures in Germany in a bid for deeper cutbacks. Ireland reported 366 Tesla sales and 4.8% market share for August. Romania reported 218 Tesla sales and 2.2% market share in the month of August. Sweden reported 1,348 Tesla sales and 7.1% market share, with the Model Y being the best-selling single car. Finland reported 312 Tesla sales and 4.8% market share. Austria reported 398 Tesla sales and 2.7% market share. The Czech Republic reported 155 Tesla sales and 0.9% market share. The Netherlands reported 1,547 Tesla sales and 5.6% market share, with the Model Y being the best-selling car. Taiwan reported 906 Tesla sales and 3.1% market share. And in the last 3 months, this is actually up 37.3% versus the March through May period. France reported 2,523 Tesla sales and 2.9% market share. Market share in France is 120 basis points, so 1.2%, or 69% above the 3-month trailing average of 1.7%. So Tesla's actually accelerating after slowing down in France yet again. Spain reported 549 Tesla sales and 1% market share for August. And Portugal reported 156 Tesla sales and 1.7% market share for August. Tesla has made some changes to their financing rates for the new Model 3 in the US in recent days. The rate for the 72-month term is now 2.99% from 1.99% before. So they actually raised the interest on the 72-month loan term. That's a sign that demand's really good. That just correlates to me. They don't need to buy down as much of the interest rate to keep selling the amount of Teslas they want to sell. The 1.99% rate is not only available for 36 to 60-month loans. The 84-month term is 3.99%. Also, the non-promotional rate for new Model 3 orders in the US is now 5.59% APR for 36 to 72 months, down from 5.99% before, while 84 months is now 6.64% APR, previously 6.99%. All of this news presented to you here in this video is insanely positive for Tesla. In fact, we really don't have any bad news to go over in this video. We haven't got any bad news for Tesla in quite a while, and it looks like the economy is at least holding up on paper. Heading into the first Fed cut, September 18th, markets might start to get excited about the first cut. And the areas that are going to benefit most from that are going to be Tesla. They're going to be values. They're going to be cyclicals and dividend stocks. Not as much your big tech. Even though NASDAQ futures are up 0.22%, S&P futures are up 0.09%, Dow futures are negative 0.06%. Keep in mind that Dow has been just ripping lately and is still at an all-time high. You can actually see the internals of our markets like small caps, value, dividends, Tesla, do very well, even if the S&P or the NASDAQ was flat or just marginally positive. Now, I do think we need to get through this week first. I do think this Friday's jobs report is going to be highly critiqued on Wall Street, and for better or for worse, if that jobs report is good, September is going to be a good month. If that jobs report is bad, September is going to be a very bad month. And that is what is really going to drive markets, in my opinion, over the next couple of weeks, in which September is historically by far the worst month in recent years for markets. You can see that here the 6-year average return in September is negative 4.52%, with 2020 being negative 5.16%, 2021 being 5.31% negative, 2022 being down 10.5%, and 2023 being down 5.58%. So especially in recent years since 2020, September has been a very bad month for stocks. And I do think this will be amplified if we do have a bad jobs report on Friday. I would expect September is going to be a bad month. But if we have a good jobs report, then I think we're finally going to buck that recent trend of September being a bad month. But keep in mind, it is an election year, and September, October tend to be where you get some of those election fears. So that will come up at some point down the line. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.